Yes, we want to get to a finances. And together with me are these great people. Wow. Isn't this beautiful? Isn't this beautiful? Yes, karibuni sana. This is the trumpet of hope. Today is a Thursday. We want to enjoy and also to learn. So, karibuni sana, my good friends, Njoki Ndegwa and Patrick Nganga. And let's start with Patrick. Introduce yourself and say hello to our viewers and our listeners all over in the world.
Fantastic, fantastic. Thank you so much, Captain. Very happy to join you to be on your show. Thank you so much for inviting me. Good to see you in Njoki. And all the viewers, all the listeners from where you're tuning in from, thank you for joining us. Once again, my name is Patrick Nganga. I'm based here in Dallas, Texas. I'm in the financial services industry, and we are here to discuss some very important matters that we are dealing with right now during this crisis. But I'm glad to be here, looking forward to it, and I can't wait to see and hear from everyone.
Welcome. That is good. Joki Ndegwa.
All right. Thank you, Captain, for, having me here and for all the viewers for tuning in. I am Njoki Ndegwa. I am based in Houston, Texas. I am a profitability and growth advisor for small businesses. So anything to do with money, I'm all about it. So I'm excited to have this conversation and to hear from Patrick and from everyone else. So looking forward to it.
Awesome. Let me start off with Patrick. Or rather, both of you. Let's see. How has the whole issue of COVID affected us as individuals? I know for me, I am an events person. I do a lot of mobility services and also events planning and everything. Right now, I'm not able to do it until I don't know when. We are not able to go and host weddings. I'm not able to go and MC a wedding or a public event. But one of the things that happened is within that time, I was able to start my streaming business. So I'm able to stream live and do such things. I don't know how COVID-19 has affected you, Patrick, and then we go to Njoki.
Uh, just like you, Captain, I'm the kind of person who likes to be out there with the people, mingling with the people, events, going out there, meeting people. Our company likes to sponsor events, and every time there's an event, we'll go there, speak at various events. We've had a few that had been scheduled for, April, May, and all of them have been postponed. But other than that, we are glad. My family, we are all healthy, and that's not something that is not too shabby. You can't take that for granted. So we thank God for that. I thank God for you. I see you're healthy. Thank God to see Njoki is doing well. Most of my friends are doing well. The community here has been slightly affected. We had a few people being, with the illness, but for the most part, all of them seem to be healing very well. For business wise, we're actually doing much better. You would think the industry would go down with people trying to keep their money aside, but uh, overall the insurance industry, especially on the life insurance side, people are buying more and more life insurance. The sales have gone through the roof. We've had a lot of people buying health insurance, as you can imagine, just in case something like this gets hold of them and their family members. So, business wise, even though we're working from home, working remotely, we can't be in our offices, we are still able to perform well. Thank God to us having some remote access, having internet. It goes a long, long way. So, overall, I would say, it's been a mixed bag, but, we're chugging along. We're chugging along.
Njoki.
Mine is a little bit different from you guys. I have very small children, so I have become a full-time caretaker, a doctor. I'm still serving my clients and, doing all this and that. But I gotta say, it's been a positive, being with the kids and all that, and then being able to balance my time and figuring out when to be able to do stuff. For example, being on here with you guys at 9 p.m. once the children had gone to sleep. So it's been an adjustment, but definitely everyone needs help at this point, and we are here to serve. So I'm seeing that a lot. Like people are coming together more, willing to offer things for free. So that's definitely something that I think is a positive.
Thank you so much. Let us dive into the issues of the day. I know there's the issue of the stimulus packet and or the stimulus package, both for the individuals and for the business. Can we introduce ourselves as far as introduce to us the opportunities that are there for an individual during this crisis?
Absolutely. There are plenty of opportunities. It's not all doom and gloom. That's why I tell people and with the crisis, there are opportunities that come about it. You just have to look carefully, and I'm glad we are getting all this information out there. There's plenty of resources giving us all the information, and Trumpet is one of them, and that's a good thing that you've allowed us to come on here and expound on that. But we have many opportunities. The first one I'm going to start with is the one that every person was supposed to get, every tax filer up to a certain income level. If you file as an individual person and you didn't make more than $75,000 a year, either 2018 or 2019, whichever is your latest filing that you've done, then you get $1,200 straight from the IRS. That one was being deposited in your account directly if they have your bank account, or the checks are going to be mailed out. For those who usually file and owe, then the check was being mailed out to you. Um, and if you have a couple, if you file as a couple, you get twice as much. So you get 2,400, and then after that, for every child that you have, you get an extra $500. As long as your income is up to 75,000 for a single parent, or up to 150,000 for both parents being there. So that's the number one. That's the number one stimulus check that was coming to people. Some people received that maybe 2 weeks ago. For it was funny that on 4/15 is the tax day. In the every other year, the 15th of April is tax day, is when we pay the IRS. But this time around, the IRS paid us. The money hit our account. So it was a good feeling. Instead of you owing the IRS was giving you money. For those people who are getting checks in the mail, the checks are, some people have started receiving them. They're coming slow, but there was an opportunity for people to go online with the IRS website. If you haven't done that, you haven't received a check, you still can go on the IRS website, irs.gov, and then post your bank account information. That way, you can get some of that stimulus money deposited in your account. For some people, it might be too late. The IRS is already mailing out the checks, so that will come to you in the mail. So that's number one.
Before you proceed
Yeah.
on that particular one, what about the people who are, is it just for the citizens? Then what about the non-immigrants? And
Yeah, so the non-migrants, as long as you have a social security number and you file your taxes, because you can file your taxes and not be, a legal immigrant. You could have, you might not be a citizen, you might not be a permanent resident. Maybe you came in on F1 and you started working, you got a social security number, and you still work, you still file your taxes. You are still being treated the exact same way. The people who might not get anything are those without a social security number. We had that issue in the news because you might, for instance, the spouse might be a U.S. citizen. They marry someone who doesn't have a social security number. All they have is what is called a tax filer number, and they were not getting any stimulus in that case. So yes, we do have some people not receiving it, but as long as you have a valid social security number to your name, you've been filing taxes, you filed 18 or 19 or both, then you're supposed to get that stimulus.
Njoki, I don't know whether there's anything that you can add as far as the stimulus is concerned. And in this, are we supposed to, is it refundable?
So no, it's not refundable. It's not going to be taxable at the end of the year. This is just something that's forgivable, I believe is the word that we could use for this. So once you receive it, that's the end of that. They're not coming back for you. Do not report it on your tax return or anything like that. So maybe they'll find other ways to recover it, but it's not going to be they're just taking it out of your paycheck or out of your returns. So yeah,
Yeah, because the goal was to stimulate the economy. That's the whole point. They
right.
figured people are without jobs, the economy is going down, so that money is coming to everyone so that they can spend it, stimulate the economy. And when the economy is stimulated, the more tax revenues generated, so the government is able to get plenty of that money back. That was the whole point. That's why they were calling it a stimulus check.
Thank you so
So,
much.
like Njoki said, that one is it's not refundable. You just have to make sure that you're filing your returns appropriately.
Thank you. Thank you. Okay, which is the other from the stimulus pack checks?
What?
The next option or the next
Oh, okay, okay.
benefit.
Yeah, the next one would be unemployment. So unemployment on the individual side, if you lost your job, you were laid off, you were furloughed, or you're an independent contractor and you don't have work. A lot of people who do Uber, a lot of people who do Lyft and the like, were not able to continue working because of the nature of the business, the fact that we have to do social distancing. No one is traveling out there. People are being told to stay at home. So unemployment is a choice for a vast majority of people. And the way they did on the package that they passed, the $2 trillion package that they initially passed, was that they would give you $600 on top of what your state would give you for unemployment. So, every state that handles it differently. The state of Texas might look at it, what you've been earning to determine how much your unemployment will be. And then based on how much they give you, the federal government will giving all the states an extra $600 to give each and every person who qualifies for the unemployment. So that's the second one.
Thank you. I don't know whether you have anything to add on that as far as the unemployment is concerned, Njoki.
I believe Patrick covered it pretty well. So yeah.
All right, good. Let's proceed on.
All right. So the other one now would be the loan forbearance. For those who are homeowners, if you're a homeowner, the part of the package allowed the mortgage companies to give you up to 6 months of you not paying any more of the mortgage payment. You have to talk to your mortgage company so that you can have that agreement in place. But they allowed you to give you up to 6 months. And then also after that, after the 6 month period is over, you can do another 6 month extension, up to 6 months extension, if the situation doesn't improve. So what that happens is that all your mortgage payment, whatever you are paying, is suspended basically. Now, that one is one that has been having a lot of contention, and every mortgage company is handling it differently. So you have to talk to your mortgage company because some of them might say, "Hey, okay, we'll allow you to go for 6 months without making a payment, but at the end of the 6 month period, all the 6 month monthly payments are going to come due, plus the seventh month that we are going into." So that's what they call a balloon payment. So you have to talk to your mortgage company, make sure that's not the case. And if it's the case, then know it ahead of time. Some people were trying to use it as a strategy to where they would say, "Hey, I'm going to save on the money that I'm supposed to pay my mortgage company." Say you pay $1,000 every month. So for the 6 months, you might say, "Hey, for these $6,000, I'm going to invest in something that I know that could make money for myself and my family, or put it somewhere where I could get some good returns." Just know that at the end of the 6 months, make sure you have an agreement with the mortgage company to where if it's coming due, all of it at that point, the balloon payment is due, then have the money ready to pay. Otherwise, you could find yourself in a bad situation where they demand the payment, you're not able to come up with it, and then you end up being put into foreclosure situation, and you might end up losing your home. So that's one of them. The forbear. So that's a big one. Make sure you talk to your mortgage company. Make sure that deal is happening. It also allowed you to talk to your landlords for those people who rent. So talk to your landlords. They will allow you. I know in the state, every state is kind of handling it differently. I know the state of Texas at the moment is not. People are not being evicted for not making their rent payment. So talk to your landlords. Tell them the situation you're in. They might ask for some kind of proof to show that you're not able to work at the moment. Because keep in mind, even though you're getting the 1,200 stimulus, you might be getting the unemployment. It might not be enough to reach to a point where you are able to make the kind of income you're able to make when you are working, so that you can be able to pay all your bills, and you still have to feed your family. So there are those things that you have to do first, like your rent, I mean your food, your clothing. Those are some of the things that are very important at the moment. So they want us to be able to take care of ourselves, take care of those basic needs like food, something to eat, pay your light bill, pay your utilities before you get to the rent and the mortgage.
Wow, that is important. By the way, viewers, if or listeners, if you have a question, please make sure that you ask. You can send the questions direct on our page, the Trumpet of Hope page. You can send the questions right there. You can as well text the questions to our numbers. I will put the numbers down here for you. So that actually you can ask the questions right there, so that we can be able to proceed on nicely and handle individual questions before the end of the program, because we just have very limited time. Apart from the stimulus checks, the unemployment, and it is important, I have put there the site for specifically Texas, the unemployment and also the loan forbearance. What other sources for the individuals?
Yes, also they have what is called an IRA conversion provision that someone can use. They actually didn't use it that way. What they are doing, that's a strategy that you can employ. What they are doing is that they allowed you to be able to borrow from your retirement funds, what they call the qualified accounts. Qualified accounts basically are those that are tax deferred. Usually when you have a 401k or a 403b or 457, or even a traditional IRA, or a self-employment pension plan, an SEP, or any of those what tax qualified, where you defer your taxes, meaning that the money you put in plus any other money that your employer might contribute for you, the matching, uh, grows tax free. You're not paying taxes on the growth. But when it comes to time for withdrawing, there is usually a penalty. There's a 10% penalty if you withdraw before the age of 59 and a half. And there's also, you have to pay taxes on the year that you withdraw. So the part of the stimulus, part of the package that was passed, was to allow people to make withdrawals from their qualified accounts, the SAID accounts, the IRAs, the 401k, the 403b, the 457. You can make withdrawals from them and not have to pay a penalty. So the 10% penalty has been waived, which is huge, because that can be a big cost on your nest egg that you've been contributing over the years. Now, secondly, they've allowed you to not pay taxes for up to 3 years. In other words, you can withdraw the money now, spend it, do something with it, and not have to pay taxes on it for up to 3 years, because usually that the money grows tax free, so you have to pay taxes on it when you retire or whenever you start withdrawing it. So part of that is what we are calling an IRA conversion can be an opportunity, because today is all about the opportunities, what we wanted to talk about. So for people who, let's say you lost your job, or you're on a low tax bracket right now, or you feel that when you do your math, you're in a good position to where you can liquidate or do an IRA conversion. You're not actually going to get the cash because the market is down. If when the market is down and you try to cash out of the money, you're going to catch the losses now. Right now, all we have are just paper losses. But it's a great opportunity for you at the moment to do what is called an IRA conversion, put it into a Roth IRA. Now, a Roth IRA grows tax free, because they're looking at it as a situation where you already pay taxes on it. So it's going to grow tax free. So all I'm saying is you can convert all your tax qualified accounts, make them a Roth IRA at the moment, to where you're not having to get the money, but you'll just change whatever you invested in. Let's say you have it in a mutual fund, have the same fund, stay in the same place. You're not losing anything at the moment, because they're all just paper losses. And that gives you an advantage in that you're going to pay taxes. Yes, within the 3 years, you'll pay taxes on that, but you're going to pay taxes on an amount that is lower than what it would have been. So let's say, for talking purposes, you have 100,000 saved up so far. That 100,000, if you cash out, if you convert it right now, you're not cashing out, you're converting. If you convert it to a Roth IRA, what happens is that you're going to pay taxes on the 100,000. So you get a tax bill, at the end of the year, but you can defer that up to 3 years, allowing us to pay taxes within 3 years. But you're only going to pay the 100,000 or the taxes on the losses, on the value of the loss of the amount the day that you converted it. So let's say you're at 100,000 at the peak of the market in February. The crisis hit us. You came down to 70,000 because we've lost about 30% in the market. You're going to convert it at the 70,000 instead of the 100,000. So you're saving right away, you're saving on 30,000 of what you would have been taxed on. Once you do that and the market goes back up to 100,000, at that point, you'll have a tax free nest egg growing. Meaning, by the time you go back in now to cash it, now you're ready to retire, you're in your 60s, 70s, you won't have to pay taxes on that. So that it's a bit a little bit complicated, but it's something that people need to look into. If you have a 401k, one of those qualified assets, talk to a professional, talk to someone, and look at your numbers before, because you might find yourself in a position where you can cash out and be able to save in the long run.
That is important.
Another, huh?
Mhm. Yeah, proceed.
Yeah, I was going to say another thing that is allowed to do right now is to get a 401k loan. Usually, you are allowed to get up to 50,000 on 401k loan, but now they've doubled that to 100,000. So if you have a 401k and you want to pull some money out of it, you can pull it out as a loan. Yes, it stops growing, but you're not paying taxes on it. They allow you to get the loan and you have to pay it back. Yes, but there's something that people usually do. I see people who pull out money from something that is growing slowly. And if you're smart enough with your money, there are places where you can invest. So, for instance, you can get it right now at 2.5%. Get a 401k loan at 2.5%. Put that money somewhere where it's going to earn you 4% or 5%, and then you're going to make more out of the money that you had in there, and you end up being ahead. And then when the right time comes, maybe after 2 or 3 years, pay back the loan, and you've already gained some money out of that. So that's something that you can also consider.
That is good, great information. For those who are tuning in right now, we are having Patrick Nganga in the studio and Njoki Ndegwa. They are both experts in financial issues or financial matters. During this COVID 19, we are looking at the opportunities that are there for you so that you will not say, I didn't know. Information is power. So far, we have handled the stimulus. I know many people have already received, and for those who have not, continue waiting. The unemployment, I know there is so much going on as far as unemployment is concerned. The loan forbearance and also the IRA conversion. And the other things that we'll continue to check. Somebody, we'll come to questions later. I know there are some questions that are coming up. Send the questions on our page, the Trumpet of Hope page, and share this with your friends. It would be so bad if you don't share this with a friend and you have a friend. Mr. Nganga, before we go to Njoki, are there any other opportunities for a private individual?
I think I would say in general, first of all, we're looking into getting some more stimulus coming in, so people can prepare for that. Looks like the Congress is in talks to get another round of stimulus. So keep an eye on that. And actually, there's something I could request even people to do. If you know your congressman, your congressperson, your senator, this is the time to send them notes. This is the time to tell them, hey, yes, give us another package. Because remember, this is money on taxes that we've already paid on. This is a good time to tell them so that you can, make sure we get another package. But overall, this is also a very good time for everyone to evaluate their situation, their financial situation. We talk about having your financial house in order. In the time that we have so much at home now with our families, with our kids, this is the right time to start looking at a few things that you probably didn't look at. For instance, number one, budget. Look at your budget, make sure you have the right money coming in the right place, because you don't want to end up in a situation where we get all the stimulus money, you end up using it, one way or the other, and then you lose your job. You end up in a situation where there is no more money coming in, and you're broke. You're starting to lose your home, lose your a place to stay, lose, you're not able to feed your family. So those are some of the things that you need to look at. And most financial advisors recommend having an emergency fund. So it's a great time to beef up your emergency fund. Having it from 3 to 6 months of your monthly expenses is great. So that we never know what else will come up. Unemployment rate is still going up. As you got in the news today, over 30 million people have filed for unemployment. So it's not looking good. They are starting to open up businesses. I know the state of Texas starting tomorrow. They're opening it up slowly, but as you can see, the numbers are still going up. So it's very important that everyone protects themselves. The government will come in place and help you, but ultimately you're the one who's going to protect yourself and protect your family, protect your community. We can't just expect the federal government to come in place. The states are really struggling. That's why when you see them defying the federal government and they want to start opening up, a big question of that, a big reason for that is because they're losing money. They're not having revenue. And unlike the federal government that can keep printing money, the states are not able to do that. So protect yourself, beef up your cash reserves. Be ready because this thing, we're not out of the woods yet. We don't know where this thing will head. Be on the safe side. Would rather end up being a situation where you have plenty of cash on hand when all this clears, and you can use that money for investments and for many other opportunities that will come up.
Beautiful. Some few questions coming in, and Jockey, I don't know whether there's anything that you need to add, or maybe to liaise with Patrick as far as the IRA, the 401k, the loan forbearance. I don't know. I see some few
I
questions.
think I just have a question for Patrick that I think it came up on here. You talked about the 401k loan, and you talked about maybe paying it back in a couple of I don't know, a couple of years. What's the norm in when you take a loan from your 401k? What time period do they usually give you?
Yeah, they'll give you a lot of times. It's 5 years, 10 years, which it might still be the case. You're just going to avoid paying more on the taxes on it. But talk to your HR, talk because every company handles it differently. But I would say the norm is about 5 years. A lot of people usually will get it and then pay off the loan within 5 years. But that's when it's 50K. Now we're talking of them allowing us to get up to 100,000. So you might be able to have an extended period of time where you'll be able to pay it back.
Awesome. What about the students?
The students,
The student loans. You
yes,
spoke
yes.
of about loan forbearance.
Yeah, so the student loan actually wasn't part of what was on the package. I think they're talking of getting that back in the next round of stimulus. So for that one, you still have to make payments on it. The student loan doesn't usually go anywhere. That's one of those that you can't even kill it with bankruptcy. So the student loans are still going to come due. So keep working on it. I think they're working on doing something on the second stimulus. Maybe even they're talking of doing something more permanent to it. I hear in the campaigns come starting next year, whoever takes office. But at the moment, we still have to keep paying them.
Awesome. Thank you so much. We proceed on, and I don't know whether I should let me ask this before we go to the business part, or rather the other section. Um, I want to appreciate the people who are tuning in. Mudogwito Mwariwawa Home, that is Amase Monene. She's a realtor. She's based in College Station and inviting so many people to tune in. Thank you. That is what we need. Mumbi Michael, thank you. Ann Patrick. Ann Lillian says thank you, Patrick. And Nduta, Njoki Ndegwa. Kate Lawrence, thank you so much. Mudogwito Esi Wakago, Wamboiga Shonga, and Wangeshi Egekonyo, Joyce Athuo, thank you so much. Let me ask a question. Is this the best time to refinance on the mortgage, and what is the lowest interest rate? I don't know. That is a question that came right now.
Yeah, the, it's a mixed bag. I think some people are able to get some good rates right now. I know most mortgage companies are becoming stricter and stricter right now because they're being forced their hand by the federal government. But I would say personally, I'm not a mortgage expert. But I think because the rates are so low, the reports came in today that they actually went even much lower, the interest rates on mortgages. So if you're able to qualify, if you have a decent credit, and you're able to get in there right now without having to pay a lot of down payment on your closing cost, it might end up being a great time to refinance. But yes, talk to your mortgage company. Yeah, if you have a very high interest rate. Now keep in mind the way they're handling their forbearance is just like remodification. So don't just go in with just refinancing in mind. Go in with the forbearance in mind, because I think that will give you a big advantage. And with the modification being treated as the forbearance being treated as a modification, you might end up coming out ahead, because you not only not have to pay the payments for the 3 months, 6 months, 12 months, depending what the agreement you end up having with your mortgage company. Also, the rates end up being lowered. Obviously, the best case scenario is for you to have all the payments that are being waived for now during the forbearance period being pushed to the back end of your mortgage, because that would be great. Can you imagine if you had, let's say, a 20-year mortgage, you've already paid 10 years, your remaining 20 years, and then you're able to push another extra year to make it 21 years. You can do a lot more with the money that you're saving in this year right here,
All right.
because the dollar right now has a greater value than it will have 20 years from now. So talk to them. I think the remodification and the forbearance might end up being a better deal than just a straight refinancing.
Awesome, awesome. I guess that is the same thing with the what SC work ago was asking, is this a good time to sell a mortgage house too? I think it comes to the same issue.
Sell a house
Is this a good time to sell a mortgage house too?
or to sell a mortgaged house. I think the market is not too good for the seller, because right now, people are pausing on the buying side. So the not too many buyers, and if they are buyers, I think they're pausing to get into the market. So if she's able to get a good market out of it, and she wants to do something with the money, she could probably do that. But I would say if you're trying to sell, maybe talk to some realtors. But from my experience, from what I'm seeing, you might not get very good buyers, very good rates at the moment.
Awesome. And that is why, before, as we cross over to the other part, um, is it right now, are we in a buyer's market or are we benefiting the sellers?
This is a buyer's market. Right now, I think we're in a buyer's market because the not many people want to buy. So the buyers are limited, and the builders, especially on the new homes, the builders were building them so fast and furious. When this crisis hit, it wasn't no one saw it coming. The economy was doing very well, was booming. The stock market, the in fact, it had gotten to a point where even the wages were rising. So the economy was doing very well. The builders were chugging along. They were on full capacity, building here, building there. And then this hit, boom, all of a sudden everything dropped. So there's a lot of inventory out there, a lot of houses that the builders are still holding on to. So you might be able to find yourself in a buyer's market situation. So if you have always wanted to buy, this might end up being a good time. And check out those new homes, because, like I said, the inventory is high. The builders don't know what's happening. They don't know what the situation will be. I mean, as you can see, the stock market is trying to rebound, but with all this bad news coming in, the GDP fell. The second quarter is not looking great. We have so much unemployment, 30 million people filing unemployment. So if someone is in a situation where they can buy, they might start wanting to look into it. In fact, I would venture to say, right now it's starting to become a buyer's market, but it's only going to get better for the buyers within the next coming months. So people can start preparing for that. If you always wanted to buy, I would say maybe within the next say 3 to 6 months, you might end up being in a very good position as a buyer.
I hope Njoki Ndegwa is now getting ready to tell us something about those people who are in the business industry. And as she prepares that, Patrick, prepare yourself to answer these questions about the stock market, your comment on the stock market, and
Okay.
also how long do you think will remain in the buyer's market. So let's cross over, but before we do, let's get a break of a few seconds.
This is
Right.
Captain RTV, the trumpet of hope. Captain RTV, the trumpet of hope. Captain RTV. Karubeta kamwe hoko. Karubeta kamwe hoko.
Awesome. We continue to learn, enjoy. Actually, I'm saying it is time to enjoy, learn, and share this with a friend. Enjoy, learn, and share this with a friend. In the studios tonight is Njoki Ndegwa and our friend Patrick Nganga. And we are talking about the opportunities that are hidden in the whole issue of COVID-19. Njoki.
Okay, Patrick, thank you so much. That was a lot of information, even I haven't been able to keep up with. So I'm sure everybody else is feeling the same way. Um, so on the business side, I think I'll also start with the stimulus package. There were two things that are pretty popular that everybody is talking about right now. And I'm going to start with one that you cannot apply for anymore because they've just shut it down because there's so much demand. A lot of people are applying for it and they just were not expecting this. And that will be the EIDL. It's an economic injury disaster loan. And that's the one where you would hear people saying, oh, you get $10,000 of forgivable money. And just to clarify that, it's not actually $10,000, it's up to $10,000. That's how much you could get. And what that means is that you are applying for a loan, a disaster loan, economic injury disaster loan, and you would get an advance on it up to $10,000. How they calculated the $10,000 was based on the number of employees that you have. And so for every employee, you would be able to get $1,000 per employee, up to 10 employees. And that bit of it is what was forgivable. At this point, they are not accepting any more applications. So maybe they'll open it up later, but they're processing what the applications that they already had received before the money ran out on the first stimulus that they had sent out. Now, the second part of it is the PPP. That's the Payroll Protection Program. With the PPP, what it is, it's supposed to help with employers who have up to 500 employees, to be able to maintain them, to continue to employ them, and to pay them so that they can continue working. Basically, just keeping people paid and reducing the layoffs and stuff like that. So anyone can actually apply for the PPP as long as you meet the guidelines. That's including the churches. I was asked that before. So a 501c would be able to apply for it. So non-profits, for-profit companies, sole proprietors, contractors, anyone could really just apply for it as long as you can prove that you were affected by this disaster. So another thing about the PPP is that it covers 8 weeks, and you have to use this money for 75% of it has to be used towards payroll. The other 25% has to be used on things like mortgage interest for your business. Now, this is all about the business at this point. So mortgage interest, rent, or utilities. If you do not use the money for payroll, or you don't use the money for those set expenses, then it becomes a loan that's payable back, that you pay back. And the way they'll find out about this is they actually announce that every business that takes a PPP is actually going to be audited. So if you're going in making this application, make sure that you have your ducks in a row. I have some clients who are actually just opening a whole new account and putting that money into it so that it's easy to track it, and it's going to be easier to show for audit purposes what the money was used for.
Okay.
Another thing about it is that you'll have to apply for this loan from a lender, an SBA lender. So this is the time when, if you have had any relationships with bankers, this is when to go to them and make your application through them. So that's how you take that application.
Mhm.
Okay.
Wow, thank you so much. That is the PPP, and does it have a limit in terms of how many employees you can have, or if I am a driver, I own one truck, or rather I do Uber, but I do it as a business. I have a registered business. Is there any limit on the minimum?
No, there is no limit on the minimum because sole proprietors can also apply and contractors can as well. So there is really no limit on the minimum. The limit is on the maximum. So 500 employees would be the max number of employees that you have. And we've seen these bigger companies finding loopholes, like the LA Lakers went in and they were like, well, we have less than 500 employees, and they applied for it and they got the money. So obviously the bigger companies have been getting away with, especially on the first round, they got away with finding loopholes. They didn't do anything wrong, but they got through the loophole, and this money wasn't actually made for those kinds of companies. It was for the smaller companies who are struggling at this point. And so what the SBA has done, they've actually set aside, I believe it's 30 million just for the smaller companies and for the smaller banks to be able to serve them. So there is no limit on the lower side.
Is there a limit? Is there a timeline when I should apply?
June 30th would be the last day, unless that has changed today, but it's June 30th. These things are changing so quickly.
Hmm.
Yeah.
That's true. And what are the requirements apart from having filed and kept my records straight or my records right? What are some of the notable requirements for a Kenyan business person somewhere in Pennsylvania, like Ruth Nyambura, or a business, a home health business person in Seattle, Washington, who runs a group home, or a trucking industry, Lawrence of McKinney, somewhere in Dallas. What are those requirements?
To be honest with you, at this point, they have really relaxed the requirements just because of how much they're trying to get people get the money faster. So they've really relaxed the requirements that usually you would have to go through with the SBA loans. And right now, all they're trying to do is get the money out there. So you'll have to show your payroll. They're using like the last 2 years and taking an average, and all it is for 2 months of payroll. So they're going to take an average for the last couple of years, and if you're a new business, they'll take your the average for this few months that you have,
Mhm.
and then also taking what your expenses are, for your business. So they've really, really relaxed everything down right now, but keeping good records is what's going to determine whether this is going to be payable back or it's going to be forgivable. So once you receive the money, make sure you're keeping track of all your payroll. Make sure everything is on the up and up. Don't try and use the money to pay your mortgage interest for your house. Definitely make sure everything is for your business and you're keeping very, very good records, because once that audit comes, that's what's going to determine how payable it is, how much you have to pay back.
This is interesting. Patrick, do you have anything to add as far as I know there's the issue of the PPP or the Paycheck Protection Program loans, and also the EIDL, which is no longer there as far as we are concerned
Yeah,
right
yeah.
now.
I think Joki pretty much covered it very well. She broke it down really good. What I've heard people say is that the interest rate is not too bad. So even if you don't keep your books, then if you end up having to pay interest on it as a loan, if it doesn't become forgivable and you have to pay something on it, you're still not in a bad position. And that's the move that some of these companies were making. You know, when you hear, like you mentioned, LA Lakers, Ruth Christie's, and even Shake Shack, all these big companies that took a lot of money that they were not supposed to, that, you know, making the smaller companies not get anything. They were making calculated moves. They were saying, hey, if I owe a bank, something, a loan, and I pay 10% interest on it, and I'm getting money from the federal government at 1%. Why why not get the other one and then pay 1%, pay off the 10%, and I'll still come out looking good even if I owe the federal government. So that's one of the things. Njoki, maybe you can tell, for those who are self-employed, like Captain was asking, and they end up getting the money, how do you prove? I mean, if you're just a one-person independent contractor, what, they want you to pay payroll to that, and the payroll is you paying yourself. Then how does that end up holding up that way? It becomes forgivable.
So that's a good question. Um, so for it to be payable back, not payable, to be forgivable, it has to show that you're maintaining the same thing that it was before. So you don't get the loan and then all of a sudden you went from paying yourself 30,000 and now you're making 100,000 so that it's payable, it's forgivable. So it has to be reasonable. And because you cannot even apply for more than what you were already paying, it's going to be harder to kind of cheat the system in that way.
Right.
So it's basically just same thing, the records. When you're showing how much have you been paying yourself, this is what the salary account is, or if you call it the distributions to the owners or whatever you call it, it's the same account they're gonna look at. They're also gonna look at what else did you spend the money on? So if you use it to, buy a car for yourself, this doesn't really cut it. So but then again, if you do decide to go around that whole system of trying to cheat the system and have to pay back just because it's only 1%, the loan comes due in 2 years' time. So it's up to you. I wouldn't suggest that you go through that. Nobody wants to owe the government.
Right. Hmm.
So do the right thing.
Yeah, yeah, and I think, like you said, it's easier to do it because you're showing the numbers before you qualify for the amount. Just keep doing what you've been doing. I mean, if you've been paying yourself a certain amount and you keep records of that, just keep doing it. If you haven't been doing it and you just did it to get the loan, then hopefully the opportunity, because Captain, we're talking about opportunities today. Hopefully
Yes.
the opportunity that you get to do right now is to put your books in order as a business person, carry that forward, and that would open up many doors in the future, because you never know. This can be an opportunity for you as a company to grow. If you're one person track, and you're able to keep your books in order, get a good loan, paid, and you don't have to pay it because it's forgivable because you're keeping your books. When you want to buy another truck and hire other drivers, then your books are going to be in order, and it'll be easy for you to qualify for other loans from other financial institutions in the future.
I don't know whether maybe I should ask this one to Njoki. What about the people who hire maybe drivers on a contract?
So those would be the 1099 contractors.
Yes.
Huh. Patrick, help me here.
Now that's a tricky one. I think what they were saying was, if someone is 1099, the independent contractors, then they are the only ones who can apply for these loans on themselves. So you, as the one who has the drivers, because you give them 1099s, you cannot apply and use them as numbers to beef up who you're paying. I would recommend the independent contractors to apply. But if you have an office where you have some people that work in your office, they are dispatchers. Maybe you have two or three. You can apply for those ones who are in the office, working within the office. But the others, then if you apply for the loan and they end up getting to apply for the loan as well, then there's going to be a problem, because they'll be like double dipping. So you probably don't want to do that. But again, talk to a pro like Njoki or somebody else to explain that further. But to me, I don't see why you should be applying on one hand, and also the driver is eligible to apply as well.
That is good. Before, as we continue, we just are preparing to wind up. But I would want there are two people who I would wish to really have their input, and this one is a mortgage expert. I know I have Mrs. Florence Wahome from College Station, and I also have, she can tell us more as far as mortgage is concerned and realtors. Jen Carr, I don't know whether you are there, but if you're there, you can call in or you can call us on our phone before we proceed, whoever is there. Also, Mr. Karaoke has introduced Caroline Kemani. If you, and Caroline Kemani is a tax and accounting consultant. These are in the Washington, D.C. And she says if you use the PPP for payroll, mortgage or rent and utilities, you will be fined. But she continues to
You'll
say
be
if
fine.
you have a home office, you can use it to pay the square footage of your office mortgage. That is what she the Caroline Kimani, who is also a tax consultant or something like that.
That's the 25% part of it, right? Because the 75 has to go towards payroll, Jockey.
Right. Yes. So she's saying you will be fine, not fined.
Oh, you'll be
Like you'll
fine.
be
Okay.
okay
Uh-huh.
if you use it for payroll, 75% to payroll, and then the rest of it towards your mortgage, rent, and or utilities. So with the office mortgage that she's talking about is the stuff that you're able to deduct as a home office. You usually can take the square footage of your house where your office is and take that as a deduction on your tax return. So yes, you can use that percentage of your mortgage interest for your home as an office expense. So yeah.
What about churches?
What about churches? Churches are also being covered the same way. So the same rules apply across the board, whether you're a church, you're a nonprofit, or you're for profit. The rules are all the same. So the payroll, if you use it, the payroll that you pay to the pastor or to the musicians or whoever is being paid, that's what's being covered there. And then the rest of the stuff, same thing, the mortgage or the rent for the church, the utilities, the interest. So same thing, that the rules are the same across the board.
Let me ask you, now that we are just about to conclude, by the way, my numbers are open. If at all there is a question that you are not able to text, you can call in on those numbers that are scrolling down there. But after going through the COVID-19, as a financial experts, what is your message to the Kenyan business person or that immigrant or that East African business person who is doing business in the US, either as an LLC or as a just DBA or even a 501c or a 5?
Well, my message would be the same as that for the individuals. I always talk to my clients and I tell them the same thing. You have to have an emergency fund. You have to have some money in reserve for your business. 3 to 6 months, same thing as an individual. You need to have that just in case of anything because nobody knew COVID was coming. We didn't know how long we would be shut down, and you cannot depend on a stimulus package, you know? So your business is growing, it's becoming profitable. Make sure you're paying yourself and make sure you're putting some money away for emergencies, not just for your own self, but also for your business so that you can have continuity in business. Number two, keep really good records, as good records as you can think of. If you have to get some help with it, do that. I recommend that everybody has some kind of a bookkeeper, whether it's a VA, a virtual assistant, to help you keep track of your expenses and of your income. Make sure you're keeping very good records. Make sure you're paying your taxes. Pay your taxes on time. Put it in escrow. Pay your quarterly taxes. That's like, don't be on the bad side of the government. Whether you have papers or not, you have a business running. Make sure you're doing it on the up and up. Don't try and cut corners. Number three, run your business as a business. It's not a hobby. it's your business. You're trying to grow something. That's the reason you started it. Otherwise, go back to work and mess around with your employer's money, you know? But if you're going to run a business, run it as a business. Have a totally separate account for your business and don't run your personal expenses through your business account. And vice versa. Don't run your business expenses through your personal account either because that just makes things very complicated and you start to lose focus. And I think my last point that I always tell everyone is stay focused. Don't worry what Kamau is doing or what worked for Joroge or, Omondi is doing this and that and it looks like it's good. There's a reason why you started your business. Focus. Stay focused on it. Don't get distracted because it doesn't matter whether you're doing it right now or you want to get distracted for 3-4 years and then remember why you started your business, then you refocus. You just waste time in between. So stay focused, do what you're good at or what you love to do or what you're happy doing and you'll find yourself, creating jobs for others. You'll have a good life and, quality of life. And of course, employ other people, give people jobs. So if you're doing it right, you'll be able to to delegate more and to employ other people and just empower people.
Good. A few questions before we proceed. Anyone can answer. Esther Mwangi is asking about the Uber drivers or the Lyft drivers.
So
Nothing else.
those would be considered independent contractors. And so they're not an employee of Uber, they're independent contractors. So they would have to apply for the PPP themselves.
Yep.
All right. Early, Caroline Minor is asking, early retirement funds withdrawal, is it being taxed at the moment?
Early retirement withdrawal, well, you pay taxes on it eventually, so that's a fact. But what they're doing is that they are holding off the taxes for up to 3 years, so you can pay the taxes up to 3 years. That's all saying if you get you withdraw say 100,000 from your account right now, or you convert it to you do the Roth conversion we were talking about, you still pay taxes. Just that the tax does not become due immediately the next year like it was normally doing. What they're waiving is the 10% penalty for those who are 59 and a half and younger. So if you're less than your age is less than 59 and a half, usually if you pull out the money, you get penalized 10% plus you have to pay taxes. So right now they won't penalize you on the 10%, but you still pay taxes, but within a 3-year period. They stretch it out for you.
Thank you. When you say, and prepare yourself to comment about the shares, but when you say emergency fund, elaborate if it means the total amount of monthly bills, or if I use a 4K, if I use 4K a month, then I need a total of 12K, 3 months emergency fund.
Yes, yes. A full funded emergency fund is 3 to 6 months. So for you to hit the place where they want you to be of 6 months would be, if your monthly expenses are 4,000, then you need $24,000 in an emergency fund. That's the appropriate amount. Um, so yes, that answers the question. If you all, and sometimes it will depend on the kind of job that you have. And the good thing is that this crisis has allowed us to figure out where there's job security, because the reason they say 3 to 6 months, it depends on maybe the industry you're in. If this crisis has hit and you're being considered an essential employee, there's a good chance that you're in a safe position where you still be earning. But you could still be an essential employee, maybe like a truck driver, but the loads are not paying, so they'll still allow you to keep working, but we don't have any good loads. So depending on the situation you're in, you're probably going to be safer having more towards the 6 months than the 3 months. But if you tell me you have 3 months, if your monthly expenses are 4,000, you're able to keep 12K, I wouldn't feel bad in that situation compared to someone who doesn't have anything at all kept in place.
Let's talk about, or let's mention, I know we cannot talk about it fully, but for the two of you, you are financial experts, and And Njoki, I usually, she speaks of financial health, being financially healthy. And let's talk about the stock market. Mombi, that is Lucy, has been asking about it, and I see others who have been, asking, can you give information about buying shares? Mention something before I read, as Caroline and Solopian.
Honestly, I have no recommendation on the stock market because I'm not a financial advisor of that sort. So I know right now a lot of a lot of the market has been crashing. So if you have a lot of money, I would say go buy. But that's just my opinion. It's not really a professional opinion.
Yeah,
Patrick.
what I would say on it is that you know it's it's a tricky situation because people are saying, oh, the market has a bargain, but when you look at the numbers, some experts will tell you it was overpriced because there's a way that you figure out the value of a share before you buy it, what they call the price earnings ratio, PE ratio. And what that tells you is based on how much the stock is costing, this is how much the earnings are from the profits that the company makes divided by all the outstanding shares, all the shares out there. So, in other words, the stocks are still overvalued, even after the drop that we've had. We've had a 30% drop from the high that we had in February, mid-February. It has been rising slightly up, but we are still low. But if you want to have an idea of where the stock market is right now, this is where it was in 2016. So 2016, if you ask most people what do they think about the stock market, most people would say it's overvalued. A lot of people are saying it's overvalued, but it defied all ration. It kept rising, hit 27, and then it came back down. So what am I saying? All I'm saying is the stock market in general, especially because when we talk about the stock market, we talk about the big indices, the Dow Jones, the S&P 500, the the market in general is still overvalued when you look at the price earnings shares. So when someone is not being biased at all, it's still overvalued. But and there's a big but, we have some companies that are out there that might provide you value. So this is where you look into certain companies, like the airlines. They've really struggled, so they went down. So someone can say, hey, I have some money aside that I could probably jump into the airline industry. The Royal Caribbean, the cruise ships, they've all been doing very bad because they don't have business coming in. You might buy and then they go completely bust, or you might buy and then they gain value. So this is the kind of money that you can play around with. Don't use your emergency fund to dive into it. This is money that you can spare to get into it. And and if you allow me, I'll go back to like Njoki was drawing all the steps that someone has to take for a business. There are certain steps that every individual has to take, and maybe we can jump into it if you have another question before I get into that.
Very good. I have three questions. I know, Njoki, I know your time is up. Actually, we are 9 minutes late. We were supposed to just be here for 1 hour. But allow me to just read these three questions or comments, and then we will go on and conclude. Caroline Kimani, I hope you'll prepare yourself so that next time when we have these issues of finance, you can come in also. I still have a window for two more people on my screen. So prepare yourself. And I know prepare yourself also, because we need to learn something on the issues of mortgage. Kenyan businesses. Now, this is I know Njoki had mentioned this, but I want to read what Caroline just said. Kenyan businesses, and I guess this is internationally, have a business bank account, separate business from personal expenses, payroll everyone, you and the contractors, chini ya table pesa wacha, and prepare. The third thing she said is prepare both businesses and personal tax returns. Bookkeeping is essential, and she concluded with hire professionals. And I think that is what Njoki really insisted. And thank you very much, Carol, because of breaking that down. Then Solopian Koipaton says the taxes on retirement fund withdrawal when paying the taxes, are they based on what your tax bracket is for the year you are making the payment, or this year's tax bracket?
Good question. Very good question. And that's part of one of the strategy that you can use. So that's what I was saying. For those who've lost jobs, they'll end up being in a lower tax bracket this year. Or even if you haven't lost a job, but your income has gone down, um, then you might be in a situation where uh, uh, not be on a lower tax bracket. So her question is, what tax bracket are they going to use? They're going to use this year's tax bracket where you get the withdrawals made. So if you end up not making a lot of money this year and you end up on be on a lower tax bracket, then you're going to pay taxes on the lower side of it. So that's why the Roth conversion might be a good idea for certain people like that, because they will pay taxes on the lower bracket now, and then later in life when they're on a higher tax bracket and their fund has increased in value, then they will be in a better position, not having to pay taxes on a higher amount.
Awesome. Is there a likelihood that they will eventually make money after this pandemic? And in general, um, will this crisis, the crash that we are all in right now, are we gonna arise and eventually make or see a boom and make money either in the stock market or in any other industry, including the mortgage industry?
I think there will be. It's just a matter of when. It's not a matter of if, but when, and how soon. They keep talking. Economists are talking about what kind of recovery are we going to have? Are we going to have a V to where it went down all of a sudden, then it's going to go up all of a sudden? Or are we going to have a U where it's going to go down and then be down there for some time, maybe months, a couple of years, then rise back up? Or are we going to have, like a Nike swoosh, a check, where it goes down and then it takes time, goes down immediately, but takes time as it goes down, it goes up. So we don't know, but what it's looking like, it is definitely going to go up. For somebody who has more time on their side, more money to put in the market, then it might be a good idea to do that now, knowing that there's a chance it could stay down for longer than you expect. For someone who was planning to say retire within the next 5 years, then I would say probably might be a bit tricky trying to jump into it now, because by the time you want to retire and get out all your money out, there might be still down and the lost values.
Awesome. Zerizina is in Toronto, Canada. Patrick, okay. Would you recommend someone to have liquid assets as an emergency fund?
Yes, that's exactly what it's supposed to be. It's supposed to be a liquid assets, a place where you can easily access it. So you don't want to be, like a checking account. You want, checking account is for your regular bills. You want to put it maybe like in a money market account with your bank, with your local financial institution. Put in a money market account where even though you're getting some, little returns out of it, you can easily access it within a matter of 24 to 48 hours. Because remember, an emergency fund, we're talking of a situation where you've lost your job and you can't come up with the next month's rent, or your car has broken down and you're taking it to the mechanic and they tell you it's going to cost you $6,000 to fix it. So it's not money that you need access immediately, but it's money that you can access within 24 to 48 hours. But if you look at other accounts out there, they have the money might be held up too long. Like if you don't want to put it in the stock market, because it's very illiquid there. Because anytime you want to pull it out when an emergency happens, then you're going to be penalized and also pay taxes. So you want to be a separate account. A money market account would be preferable.
Thank you. We are in the last part of our program. I know there is so much that we are supposed to say. This has been an introduction as far as being financially healthy during COVID 19 and also the opportunities therein. And that is why Nganga is insisting. We are talking about the opportunities. We'll come in and talk about the other things about the insurance, the life insurance, the policies, and any other thing that we need to talk about. But so that I can give you a minute to close and share with us your contacts and what you do privately so that people can reach you. I want to read Caroline Kimani's comment. A business will rise from this. Businesses need to get more creative, just like food trucks, barber salon trucks are starting to go back and make money online, your business operations. That is a dose from Caroline Kimani, who is a financial expert, and I think that is very important. And also for the mortgage industry, I know there's a lot going on. We need to know where and how to be smart and to rise up from this and to learn positively from this. And because I have the experts in the studio, I don't want to say anything. I want to give them an opportunity to give us a dose. The topic was the opportunities within COVID 19. And right now, my financial health advisor is here, and we need to conclude. Thank you so much. This is your time, Njoki.
Okay. So I just want to say that, like Caroline said, we just have to be very creative. You got to think about how you can serve your clients outside of what you've been doing. How can you do more? You might have to introduce other services that are going to be profitable for you that you can do with the social distancing and all that. How can you involve other people? How can you, maybe you have to collaborate with other people to be able to be profitable. So creativity is going to be a big thing. But then also, I just thought about something that I did not mention earlier. Remember that the IRS mentioned that if you take the PPP loan and it's forgivable, those expenses are not going to be tax deductible. So you don't get to double dip that next year you paid payroll using the PPP and then you're taking that as a deduction to your business. So just remember that when you're keeping your records. And also the student loans have been suspended for 6 months, including the interest. So that's also another good point. So, and thank you so much for listening and for sharing, and even for just having me here. So thank you very much.
And if somebody wants to see you or to talk to you privately, or maybe to have some personal or business advice.
So I did share my number. It's 832-877-3886. And what I do is I basically work with people to help them with creating and coming up with a strategic plan and helping them to implement. So since you guys all spent your time tonight with me, I'd be happy to have a 10 to 15-minute conversation with whoever who would be willing, or wants to ask me any questions. Just shoot me a text on that number, and then we can have a conversation or we can have a call. So, yeah.
Awesome. Patrick Nganga.
Yes, yes, absolutely, absolutely. Thank you so much, Captain, for having me on. Njoki, nice to connect, nice to be together in this panel. And I've really, really enjoyed the conversation, enjoyed the comments from your viewers. That's fantastic. And this is kind of conversation that elevates us. And like you said, this is the time for opportunities. On the individual side, which is what I was concentrating on, the biggest thing I would hope that everyone ends up doing is improving on their finances. You know, a lot of times we don't do budgeting, for instance. Hopefully, this is a time that you start doing budgeting and you budget every month. A lot of times we know we are making so much money, but we don't know where it's going. We find ourselves not at the end of the month, we're not sure where the money went. Do a few things. You know, number one, always pay yourself fast. Pay yourself fast. That goes without saying, because now that you're young, you're unable to work, you're in your 40s, you're in your 50s, you're in your 60s, you might not be able to, be in a position to work when you're in your 70s, your 80s, and your 90s. That's where you want to work now, pay yourself now so that you can reap those benefits later. Put that money aside, have it grow. We normally tell people put in at least 10 to 15% of your income aside just for your use for later. And the good thing about money, money works hard and harder than you. I promise, because money does not get sick, money does not call in. So if you put it in a nice place where it's growing, and we have products that will help the money grow tax free, and you can withdraw it tax free. If you can do that, then your money grows and works for you day in, day out, interest compounding, without any chances of losses. So that's number one. Number two, you want to make sure that the emergency fund that we talked about, and then you want to make sure that you pay off your debts. Avoid carrying so much debt, because as you're paying debts and you're carrying a lot of interest, then your most of the money that you're making ends up going to the financial institutions. So employ what is called the debt snowball. Pay off your debts so that you're in a position where you can invest, and then also pay, as you're saving for your retirement, also put something aside for the kids. Have a college fund for them, have something in place to help them later in life. So, and those are some of the things that we can help you with. So, on top of that, we also help people with car insurance. We help people with homeowners insurance. We help people with health insurance, life insurance, Medicare, long-term care. We are full services financial office here in Dallas, Texas. We help a lot of people in many ways, more ways than one. We collaborate with other places to help you with um, uh, this one thing or the other. So when it comes to financial services, we got you covered. You can reach out to us at 405 5391. And I know, Captain, you have my contact information. Anyone who wants it can reach directly to you, and they'll be able to have it. But in general, I've been having a great time, had a wonderful time on here. Enjoyed the show, enjoyed the viewers, and looking forward to even coming in and seeing more and more of us discussing things that are helping us all improve our lives.
That has been beautiful. I have really enjoyed, and I know that for our viewers, hey, I had Henry Maturi, who is an attorney, immigration attorney here, maybe last week, and he gave us a deal for everybody who is going to consult with him. So I don't know what deals you are giving to my fans and my listeners. I know Njoki gave them 15 minutes, yeah? Or you said 45 minutes?
You know what? We'll hear from the 10 minutes and see how far we go.
So Patrick, make sure that you give my listeners and the people who will consult you, you give them some very good deals, yeah?
Yes, yes. Whoever calls and says they heard us from Captain's show, then they get the first 30 minutes free consultation.
Hey, thank you so much, and may God bless you so much. It was nice having you, and we look forward to another great session as we continue to work it out. Hey, if you have other people who can come in, I'm looking forward to discuss about mortgage and dig deeper onto the issues of insurance. Mr. Nganga, you can prepare yourself for that. Njoki, you can prepare yourself for something else. I know you have a very dear heart as far as financial health is concerned. So one of these fine days will come specifically to speak about financial health. I'll give you the time, 30 minutes. Hey, talk about financial health. Tell us what we do wrong. Tell us what we need to change. Those good mannerism, either as an individual or as a business.
I look forward to it.
Thank you so much, and may God bless you so much.
God bless you too. Thank you so much.
Thank you.
Bye-bye.